Welcome to the Broken Pie Chart Podcast, episode 324. I'm your host, Derek Moore. All right, this week, I'm going to talk a little MicroStrategies and whether or not it actually is a chance of getting into the S&P 500. I had a couple people ask me this question recently, and so I think it's worth reminding everyone that the S&P 500, it's an index, but I believe they have a board where they discuss which companies will go in, which companies will go out. For example, in March, I think this is March 24th of this year, DoorDash, TKO Group Holdings, Williams-Sonoma, and Expand Energy, two of the four I've heard before. I'm sure I haven't looked at the other ones. Those came in. Borg Warner, Teleflex, Celanese, and FMC all went out. And, I think it's actually one of the more underrated things. And I've talked about this a number of times if you're a longtime listener, but it's actually kind of an underrated thing. Because when you think about the S&P 500, it has earnings estimates. We've been saying, what did I say last week? It was like $265 a share over the next 12 months, 4 quarters is the EPS per share. And what happens is in the S&P 500, all of the companies that are in there, their earnings are aggregated together. So they earn what they earn. It all goes in a big pot. They calculate the number of shares and they have revenue. They have net income, which gives you the profit margin, which gives you the per share. And things like buybacks, where net buybacks, meaning if a company buys back a million shares, but they issue 2 million shares in stock-based compensation, well, their share count actually went up. And in fact, we saw that in the 2000s, where I think for that decade, there were additional shares that were, put into the market because companies were issuing shares, part of stock-based compensation or, things like that. But when you look at the S&P 500, the reason why I think it's underlooked is because if you think about it, and this is a generalization, in theory, you're taking companies that are maybe not as strong and replacing them with companies that might have more growth, they might have more earnings, they might have more revenue. And over time, what happens is the S&P 500, I would argue that the S&P 500 index, it's an actively managed index because there are real people who are deciding not only what to put in, what to take out, but when to do it. So I remember when Tesla, that was the big one, when is Tesla going to be in there? And finally they put it in. So in order to get, and I'll come around to MicroStrategies. Something else I wanted to mention. I think it was Sam Rowe had put something out on Twitter that on average, something like 30% of the members or companies in the S&P 500, I think it was a Goldman Sachs study that looked at that. But the average is about 30, 31, 32% turnover over a 10-year period. So think about that. The S&P 500 index, not only do different companies rise to the top because it's a market cap weighted index, but you also have companies leaving and coming in all the time. And I say it's underrated because earnings growth could also be impacted in a positive way if you're taking companies that really aren't earning a lot and you're bringing in new companies. So I think it's actually overlooked and it's quite important. Now, I mentioned that there is a board that makes these decisions. So basically, you have to have this board, this committee, maybe it's a committee. The committee say, all right, we're going to vote on this company to come in and we're going to vote on this one to come out. Just because a company meets the quote unquote requirements doesn't mean it automatically comes in. So it has to be a US based company. That's part of it. And it has to have a minimum market cap. So the number of shares times the price. I believe they raised it to something like 20 or 21 billion as of the beginning of this year. It has to have a quote unquote significant public float. And what that means is the shares have to be tradable. 50% of the outstanding shares must be held by the public, not by quote unquote insiders or other large shareholders. There's some volume stuff in there. It has to be liquid, and I don't remember what the volume requirement is, but it's got to be publicly listed on a U.S. exchange. It also has to have its primary listing on a U.S. exchange. So it's got to be a U.S. company. It's got this is the other one with regard to earnings. It has to have positive earnings, I think, over the cumulative 4 quarters and at least the last 2. I believe that's the rule, but I'll double check that. So the question is, why isn't MicroStrategy's in there? What other companies might qualify or might be kind of on the radar? Well, one of the ways that I sort of think that that people can take a look and see which companies are bubbling up below the surface. VXF, Victory X-Ray Frank, is the Vanguard Extended Markets ETF. And think about this is, I think it has something like 3,400, 3,500 companies in the index. It's a market cap weighted index, same thing as the S&P 500. But it doesn't have any S&P 500 companies. So if you look at this, for example, if I'll put this in the show notes as a link. And if you look at this index or this ETF, which is based on this index, you'll see that MSTR MicroStrategy is the largest company in this index and in this ETF. You have CRH, which is CRH PLC, APP, App 11, MRVL, Marvel, Cheniere Energy. I don't know if I'm pronouncing that correctly. Coinbase, Flutter Entertainment, and Snowflake. Okay, Snowflake's been in the news. So that's kind of a good, if you want to see like, hey, what are some companies that maybe are on the cusp and might at some point, these are some of them. If I look at some of the other ones, Datadog, Square, which is XYZ. I hate that they took that symbol because whenever I want to talk about an option example, let's say you're trading ABC or XYZ stock. Well, now XYZ actually has an actual company ticker. Robinhood, HubSpot. Anyway, so you can check that out. So what about MicroStrategy? And number one is they have not been profitable. And there's an article I found where it had a quote from Eric Baltunis from Bloomberg. MicroStrategy falls short because it's been profitable in just one of its last 4 quarters. When was this dated? This was in December of 24. And so I think they make it on the market cap. But they don't make it on, so they're a U.S. company, but they haven't had positive earnings. In this article too, it says under current accounting rules, MicroStrategies, aren't they strategy now? Yes, this is from December, so they're still calling them MicroStrategy. Their Bitcoin holdings are reported at the lowest price since purchase. That's not important. Hang on. However, a new Financial Accounting Standards Board rule change in January could work in MicroStrategy's favor. The new rule will allow MicroStrategy to classify Bitcoin as a financial asset and value it at fair value, benefiting the company's earnings given a Bitcoin price near 100. Okay. If I look at MSTR's current market cap, okay, 113 billion. So they qualify there. Basically, it's just the earnings. So the question is, should they be included? Do we want them included? Do you want them included? And what would it mean? Well, of course, I think they're in the NASDAQ 100. And those other companies I mentioned, like Snowflake, they're on the NASDAQ 100. I think Marvell is in the NASDAQ 100. But sort of what it means is, I mean, if you get in the S&P 500, what does that mean? That means all of the index funds have to buy your shares, have to buy the company shares. So it's kind of it's sort of a big deal. what does it mean for the index though? Like how big would, it's a market cap weighted index. They're 113 billion. Apple is a couple of trillion. So, I mean, how much MicroStrategies was the S&P 500 even purchase? Just taking a quick look, it looks like it would be, I don't know, somewhere in the mid 80s as far as from top to bottom. If you threw it in there right now, it would probably be right around 85 or so if it actually was in the index. Whether or not it should be there, whether you want it there, I mean, think about it. This company really is, I mean, it's at times their market cap is worth more than the Bitcoin that they own. So their earnings would basically, if they have this accounting change, and I'm be honest with you, I haven't dug into it too much. If Bitcoin goes up, and in theory they would have earnings, I don't know. It's look, longtime listeners of the show know I am not a fan of cryptocurrencies. I still don't see the point of some of these, but regardless of what I think, Bitcoin once again is around $100,000. Is Microsoft the right vehicle to express your Bitcoin position? I don't know. There were, in theory, I don't know what the relationship is between their Bitcoin and their market cap, but remember they were $500 and something, and I think one hedge fund came out and said, "Hey, I would short MSTR and just buy Bitcoin." But regardless, look, they'd be about 85th. Would it be a really huge allocation? Well, it's not Apple. It's not Microsoft. So anyway, it's something to keep an eye on. And I just go back to no one really talks about this. And I think people should, because companies coming in, companies going out, it does make a difference, and it makes a difference to the earnings growth. All right. I want to follow up on something I said a couple weeks ago. And I was saying, I thought in Canada, so let me backtrack. Right now, and this dovetails into the Fed. We got to talk about the Fed. They did nothing, said really nothing per se. Well, maybe they said a little bit. Should they have done something? But the reason why I was thinking about mortgages a couple of weeks ago is the idea, if the Fed were to lower rates, and if the 10-year Treasury could go down, because really it's the 10-year Treasury that 30-year mortgage rates are sort of correlated to in the U.S. And one of the things that's interesting is, I think there are, I saw a stat that something like 30%, maybe 40% of homes don't have a mortgage. I mean, they're owned outright. Either it's an investor that comes in and they buy it, or people have been there for a long time and they've paid off their mortgage. And a lot of people still have very, very low mortgages. Now that will change because there's always reasons, somebody gets transferred, somebody moves, there are reasons why, divorce, whatever, they two people are going to like, okay, we're going to sell the house, we'll split it. And so any number of reasons, people retiring, saying, I'm going to sell my house. I don't want to deal with the AC going, the central air going, or the roof going, or the whatever else, or the upkeep, the insurance, the taxes, all that stuff. I just want to rent. But so that it kind of goes back to how in the US right now, there are a lot of people still are not impacted by the higher rates in mortgages. If the Fed were to start lowering, although the front end is not related to the middle or the back end, certainly, it's sort of tangentially is all related. But I did ask, my understanding, and I said, if we have any Canadian listeners, tell me what, I didn't think that you could lock in, let's say, a rate for 30 years like you can in the US. And somebody on the YouTube channel, and by the way, we don't do any videos, it's just the audio that's there, but some people like to listen to it on YouTube. And this is Motor Artisan 791 said in Canada, mortgages can only go a maximum of 5 years. You can amortize it for 1, 3, 5, 10, 20 years to determine your payment, etc. But the term which it ends and must be renewed is up to maximum of 5 years. In other words, all those people who bought $1 million houses 3 to 5 years ago with interest rates at say 2.5%, and mortgage payments around $2,500 a month, which is not unreasonable as we have the biggest housing bubble on the planet. The average home price in Canada is around $880,000. When the mortgage comes to an end of their term, which is coming full circle now, they are faced with new higher 6% rates, meaning their mortgage goes from $2,500 to like $5,500 a month or more overnight. Interesting. Thanks for I asked the question and I got an answer. So, and it's possible Europe is that way too. Some of our European listeners can let us know. But that is interesting. And, you would think if all of a sudden you have mortgages reset at this 5-year mark and people, as his example, 2.5, and now it's 6 or more, then what does that do to demand? And you would think that if all of a sudden, people had to sell their homes because they're like, well, maybe I'll go rent or maybe I'll do, whatever, because they can't afford the payment, you would think that would tamp down demand and would also put supply into the market. So we'll have to watch that one. That's thanks for answering that though. And I always say that, a mortgage in the US is almost like having a call option on a bond, meaning, so if a company issues a bond and it has a call provision, it can say, well, we want to call back in that bond, pay it off at a certain price, and then sometimes they'll just refinance. And a lot of times you'll see that when, let's say, interest rates really dropped and you had companies that put out bonds at higher rates, they could call those back in, refinance the debt, issuing a new bond at a lower rate. And individual homeowners have that ability in the US where they can say, okay, I financed it at 6.5 or 6, and let's say rates go down to 4%. You can call in that loan, meaning pay off the mortgage, refinance, and go into something else. So, all right, back to the Fed though. So, I don't know. I mean, there were a couple of people who were saying, no, the Fed's going to do a cut. The Fed's going to do a cut. And I had mentioned the Fed so far has not done anything that wasn't predicted, meaning they've telegraphed it pretty well. And we watch the Fed funds futures and you look at the June meeting, a 17% probability of a 25 basis point cut. The July meeting, a 51% probability of a 25 basis point cut. That's 0.25%. And you go out to the September meeting, basically it is, they're forecasting a cut there. They're forecasting another one at the December meeting. So only 2 25 basis point cuts are forecasted now. Should the Fed have cut? All right, this goes back to the Fed didn't cause inflation, and then raising rates didn't end inflation. It was the mismatch in demand caused by all the stimulus, and it was, really a supply side issue. So if the Fed lowered rates, would it actually cause inflation? No, I don't think so. And maybe I'm a contrarian on this, but they didn't cause inflation. They could have left rates fairly low, and I think we would still be in the same place. Housing, a little bit different, but so I don't know. I mean, you look at wage growth, and I think wage growth now is below the most recent print was below the Fed funds rate. And that's the first time that's happened in a while. You also look at the 2-year Treasury, and the 2-year Treasury is sort of, as Treasury Secretary Scott Bessent said, is telling the market it should be cutting. But I wonder too if Chairman Powell is going to kind of dig in here. And maybe just to make a point, the Fed's going to be stubborn because they don't want to give in and cut rates. So I don't know. I mean, I think everybody in 24, what was it, priced in 7 rate cuts. And I remember Jay and I were saying, I don't know. I mean, they may either not cut or they might just cut a little bit and they wind up cutting a little bit. But is there a scenario where they don't cut at all? Sure. I mean, the Goldilocks scenario is interest rates stay flat and we still see growth. Now, obviously, some of the stuff with the tariffs has to get worked out, but is there a scenario where they don't cut? Sure. Now, the Fed funds futures, those bounce around. And so whatever it says today will be different than, a week from now. If you go back to April 9th, which was a month ago, and you were to say, okay, what's the probability of cut? I mean, the July meeting had the cut, and there was like a 63% probability. The June meeting, there'd be a cut. So these things bounce around. They definitely do. If you go back to, I don't know, let's see, December 31st, what were the Fed funds futures saying then? They were saying a June cut. So you shouldn't just look at the Fed funds futures and say, oh yeah, we're definitely going to have a cut. But I think they should have cut. And part of the reason why they should cut is this mythical 2% inflation target. I explained last week. You go back and listen to that show. Look, inflation is never really at 2% and just sticks at 2%. It's often not around there. Now, this week we have inflation, CPI, that comes out on the 13th. What is that? Is that, that's what, Tuesday, right? I think. Yeah, that's Tuesday. So CPI, the survey is 0.3%. CPI X food and energy. Survey says 0.3%. CPI year over year. CPI, of course, includes food and energy, plus 2.4. CPI X food and energy year over year, 2.8%. The Cleveland Federal Reserve Bank of Cleveland has an inflation nowcasting, and they have April CPI at 0.22. They have core CPI at 0.23, so less than the survey there. And if those numbers come out, it would be 2.34% year over year, 2.76% core CPI year over year. So, it's not forecasting anything crazy, and it did come in less than expected last month. So, I don't know. It's not 2%, but it's not 9%. A couple people have been telling me I need to look at Trueflation. So I'm not familiar with this. I did look it up. It said Trueflation's inflation calculation differs from the Consumer Price Index, or a CPI, primarily in how it gathers and weighs data, offering a more decentralized and real-time approach to inflation tracking. While both use the fundamental premise of year-over-year CPI to measure price changes, Trueflation uses different data sources, price data, and weighting schemes. Well, and they have the U.S. True Inflation Index at 1.62 year over year. Okay. Look, there's a number of these that are out there. There's, what's the other one that uses the methodology that we use in the U.S. in up until, I think, late 70s, early 80s. But I don't know. It's 162, but according to theirs, the low was, let's see, on April 6th, it was 1.22. Look, I don't know enough about this, but the point is that, so far inflation has been moderating, or at least remember, prices never really go down. It's just the rate of change and how much they go up has softened. And we'll see what happens. We'll have a CPI report. We'll see if it actually comes in hot or not. The other thing that, a lot of people made a big deal about the GDP numbers. And if you look at the Atlanta Fed GDP, basically they are above the analyst now. So looks like the estimate is 2.3%, up from 2.2% on May 6th. And the range of the top 10 and bottom 10 average forecast is, I'm guesstimating here, about 0.75% for Q2. Now, we were very early in Q2, and Nowcast just use the data as it comes out. But, And I will tell you, let me see the net exports. Yeah, so net exports is still negative, which normally it is, but it's not as negative as it was. So anyway, take that for what it's worth. Other thing I wanted to mention briefly is a little bit of technical analysis. So the S&P 500 obviously off the lows. And look, I'll let you know at the end of the year whether we put the low in. But if you're asking me, do we put the low in for the year? I think we maybe did. And we're coming up to kind of a key level. We closed at 56, 59.91 in the S&P 500. The 200-day moving average is 57.48. And that sort of aligns with, some old resistance around 57.73. So, yeah, I mean, look, it's the moving average is sideways right now. The 200-day seems like that's, could be a little bit of resistance. But if we break through there, maybe that's kind of interesting. The 50-day moving average is at 55.51 below. So we've had the cross below the 200-day moving average. And put prices back above the 50-day. So it's kind of right between the 50-day and the 200-day. 200-day on top, 50-day on the bottom. So on a technical basis, we'll see. We're kind of at a little bit of resistance point here. We're through the throes of earnings season, except for NVIDIA. That's really the last big one, I think, to report. What are the chances this gets back to 6,000? I think it's got a good chance to. Look, I'm not telling you to buy the market or sell the market. You want to buy, you buy. You want to sell it, sell it. But if you ask me to kind of make predictions, do we put the low in for this year? Sure. Why not? I think we did. Do we make a new all-time high? Maybe. If the tariffs get wrapped up, if there's some certainty there and Wall Street can calm down and make its earnings estimates and all that stuff, sure. And I think if the Fed were to lower rates, it would certainly help equities. I think the market would rocket. If they had come out and lowered rates, I think the market would have been up quite a bit. But it's, as I say, long term, it's really about earnings, and the market tends to grow with the growth of earnings. So we're through earnings season. Wasn't too bad. We'll see what happens. All right. As far as recommendations this week, I mentioned you should be watching the NHL playoffs. If you're not, if you haven't watched hockey, you should be. Great series. And as I'm recording this, the Toronto Maple Leafs lost a game 3 to the Florida Panthers. Florida is punishing. Like they hit, and I think they had like 90 hits in the game or something like that and won in overtime. So that's been a great series. And, I got to tell you, I think the Edmonton Oilers and Connor McDavid, they look like they could wind up in the finals again. It's kind of looking like that. And watching McDavid, look, I mean, I remember watching Gretzky. I saw him in person. Messier, Yager, Mario Lemieux. Didn't see Gordie. Well, actually, I saw Gordie Howe on TV, but he was who was he? He was playing for the Hartford Whalers. Like he played till he was like 50 or something like that. I have to actually look at that. But you watch Connor McDavid skate, and I don't know if I've seen anyone skate quite as good as him. Like is he the fastest skater? I don't know. Maybe McKinnon on Colorado is faster, or maybe the same. But I mean, the way he controls the puck, the way he controls it in traffic, I don't know. I don't know if I've seen a better skater than him. So you should be watching the NHL playoffs. There's one thing I was walking in, my wife had it on, didn't see it from the beginning, but I remember how good of a movie Crazy Stupid Love was. Totally rewatchable to steal from The Ringer and Bill Simmons. They do a podcast called The Rewatchables. And it probably was one of the last great adult comedy dramas. I don't remember what year it was, but so if you haven't seen that, it's well acted, a lot of good people in it, and it's pretty funny. And it was on just randomly, and I walked in, and I wound up watching the last half hour of it. So there you go. All right, that's it. We'll see what happens with inflation. We'll see what happens with the markets. And send emails, derek.moore@zegainvestments.com. That's derek.moore at Z as in zebra, E as in Eddie, G as in George, A as in Apple. Investments is up to you to spell correctly. That's it. Talk to you next week. Bye.